So let's look at the money flow index. We talked about that as setting up trades. We're going to try to get into and maybe look at a potential trade in the marketplace. Money flow index, when it's high, we want to look for buy signals in the market. So that's a nice setup tool, working on weekly charts. So here we are. This is the way real time looks. Oh, the market's holding up here. Professionals started to buy it. Maybe we have a trade. Maybe we don't. This is Johnson & Johnson, a good company, a nice stock. So we'll look at a next chart, if you would. Now we're looking at the seasonal pattern. We've seen the buying come in. The seasonal pattern is to rally. One thing going for us. Now we have two things going for us, don't we? We have the seasonal. We usually rally this time of the year. This is a daily chart we're looking at. And there's been money flowing into this trade or this stock. Aha, maybe we're onto something. So we now look at accumulation in the marketplace. Say, oh wow, Johnson & Johnson fell out of bed here, a lot lower than here, but we're actually kind of holding the same. We're a little bit higher. We've seen a little accumulation in this market. Certainly not a lot of deterioration in the market. So we have seasonal, we have accumulation, and we have the flow of money coming into the marketplace. Not only are we strong in here, we've held during when we should be making lower lows in the seasonal pattern. We're not, so we're a little stronger than the seasonal pattern. This is what a trade's going to look like.
But at the end there, the seasonal went up and it went down.
Well, right here, we don't know the future yet, do we? Right here?
No,
Here? Yeah, we should start to see this, but I'm looking at the bigger picture. We're usually down this time period, aren't we? We're a little stronger, not a lot, but we're a little stronger than the seasonal pattern. I'm getting a trade set up. So this is what happens. We were set up. We saw the accumulation. You could draw a trend line coming down there, do most whatever you want to do to look for some type of a buy signal. Of course, we want to know where to get out of it. Well, this stock went from here to here, so that's one block and about half a block. So we come up 1, 2 blocks. And our target area is going to be up there. We don't get to the target area. You don't always get to the target area. So we need a trailing stop. You just keep bringing your stops on and up each low. Oh, we're going to get out of the market. We've taken out the prior low, and we're out of the trade. That's the easy way of doing it. We find a conditional setup, a stock that we like, confirmation from a couple of tools. Any trend system you use in here is going to give you a trend change. Place our stops, ride the trend. That's how you trade stocks. And stocks are probably easier to trade than commodities because you have, in commodities, markets never close. They're seamless. We don't have gaps. And we don't have the big volume that you have. It's a whole lot easier to do it. You TradeStation users who want to get these tools, Louise needs your customer number and network ID. And Harry's going to demonstrate how you navigate to those numbers.
Okay. To get the library, Louise will need your customer ID and network number or something, these things here. So all you do is go to Help in TradeStation, About, and they're right here. And so just email these to Louise, and she should be able to get you set up.
Okay, we'll go to now I'm going to show you ADX trading strategy. Really cool strategy, pretty simple to follow. I'm going to show you the numbers first of all though, so you see the numbers of the trading strategy. I only use this trading strategy in the Dow or a stock you really like. That's probably a bullish stock. I don't know that I use this for short selling. I will explain the strategy shortly. This is American Express. American Express has had 35 trades, 29 winners, made $50 trading American Express. Pretty good numbers for a mechanical trading strategy. Next chart we have, that's the equity curve. Well, it had a couple losing trades in it, but on balance, pretty nice equity curve in the market. Next one is Coca-Cola, Buffett stock. $29 profit, 36 trades, 32 winning trades in the market, 88%. Our equity chart, that's Coca-Cola. The exact same formula that we use for Coke, or the formula for Coca-Cola is unknown though, right? They hide that in the formula for Coke, nobody knows. But we have a formula for trading it. Microsoft, the exact same rules, about 80% accuracy, $37, that's dollars per points, of course. And the equity chart on Microsoft looks like, there's the equity chart in Microsoft. Now, whenever you're testing stocks with a trading strategy, you have a real problem we need to address. Those who like to program stuff may have not picked up on this. Microsoft, back here in time, because they keep adjusting, Microsoft has been split, right? A bunch of times. So Microsoft is only selling for $2 a share on the adjusted stock, but it wasn't selling for $2 a share back then. So to really get your good data on a stock trading strategy, you need to look at like the last 10 years without all the adjustments in it, because otherwise you're comparing apples with oranges. You're saying the stock was $2, it never sold for $2. Don't you wish it did? But they adjust it, so going way back, it gives you artificial results on any stock trading, mechanical trading strategy. Just keep that in mind. Here's the rule, really simple rule. 80x bar, that's our punch formation, right? If it's greater than 45, we're going to look for a buy signal. When price closes below a Keltner band, and I will explain Keltner band to you in a moment, we'll place a stop to sell on a limit at the X bar upper Keltner band. That's all there is to the strategy you just saw. We have Keltner bands. If we close below a Keltner band, we'll buy it there and we'll sell it when it gets back to a Keltner band. That's it.
What stop losses do you do? Any?
No stop loss. You might want to use a stop loss. So I'm going to put a Keltner band chart on. Somebody have a stock in the Dow they're interested in looking at? Intel. Okay, let's take a look at Intel. I prefer it when you guys and gals choose the stock, not me, so you know I didn't rig the game. We'll get to Intel. There is Exxon. There is the Keltner band, developed by Charles Keltner and his wife, a couple from San Francisco, deceased many years ago. The seasonal pattern is the blue line on my chart. The accumulation fund flow is down here, and there's the VIX index down here, looking for volatility. As you can see, we got a buy signal there. If we want to look at how good or bad this did, there's the equity on Exxon with this simple strategy. But the question was about INTC. INTC, been a really tough stock to trade, by the way. We'll look at some current signals in it. So this is Intel recently. There's the Keltner band. We had some buying index by the funds back here, and we had a high volatility level. Seasonal pattern, it sets up a buy signal starting in October. Pretty exciting, because if we can hold up in here higher than back here, we're going to have divergence. Do you see that? The seasonal pattern is down. We don't know yet, but if we're higher in here at the end of September or October, we've got a seasonal setup in this market. Now, how did it do with the system? It has not done well. It's one of the few stocks that has not done well with the Dow, in the system. About 2 or 3 of them that have not done well. That's one of them.
Where is ADX on the chart?
Pardon? ADX is not shown on this chart. I can put it on if you want to. Here's Apple. Apple, you have the same problem we talked about with dollars, because it was adjusted when we go look at Apple going back in time. We go way back in time, it's at $1. It's actually, in some of them, will show minus $1. So you cannot look at a trading strategy without taking into consideration the adjustment that have gone on with dollars. You get totally different results. Now I'm going to show you how we're doing this. I'm going to make certain that I've got this correct here, format strategy. So this is our strategy. I'm using an 18-bar Keltner band with an average to range of 8. I've got ADX set at 40. We'll set that at 45. And, okay, set default, enter. Oh, let's do Fastenal. Another very hard stock to trade. Stock I like, but tough one to trade. Let's see if we can see signals happening in it. Yeah. We closed below the lowest of the Keltner bands, and we had an ADX buy signal. It then rallied to the Keltner band, the 80% of the Keltner band. So closing below the Keltner band, we tend to rally back to a Keltner band. Closing below it, we rally. Closing below it, we eventually will rally back to a Keltner band. Close below it, we don't immediately rally back. Close below it, you always will rally back to a Keltner band, but it may be at a lower price than when you started it. Here, it obviously wasn't. That's why it's important to put ADX in there. I'll put ADX on for us if I can do that. Format analysis techniques, ADX, stitch punch. Now we have, take this line off. You can see we're getting above the green line area here, and we're closing below. So we're looking for that buy point. But in here, we're in a punch setup, but we have not just closed below the ADX line. Results on it, there's Fastenal equity curve. We'll do, oh, this is a good one. This is Costco. Just had a buy signal recently, looking to get out. We're in a punch formation, so closing below the is what we're looking for a buy signal. So we can find another one back here. We bought here, we got out over here. It was not a winning trade. We look at the total equity curve of it. That's the total equity curve of it. Now what I like about it is stocks vary a little bit, so if we want to, well, let's go to Intel. I'm back 15 years, that's good. So I'm using an 18-bar Keltner band. You know what? Let's just see if that's really the best. We'll go from 9 to 20 days. Is that the time frame that market's working in? I don't know. Can I find a better time frame? Probably can. So you can customize this to your stock. And here, Keltner band looks like about a 17 bar has been the best with gross profits. And then we go to Caterpillar, another real tough stock to trade.
And Larry, those profits, are those based on one share?
I'm sorry?
The profits, are those based on one share?
One contract only. So there is, it was Caterpillar. So just a one contract, one share.
These are equities, so there's no contract.
Right, yeah, just a one lot position. Yeah. So what I like to do is find a stock that, let's see if I can do this a little better, that's coming into a seasonal low and closes below a Keltner band for my entry point in the market. So here's a rally that we typically see in this market, and I'm looking to close below the band so I'm oversold. That's where I want to look to be a buyer. I want the market to close below the equity band, and then I can sell at the high of the band or try to ride that seasonal pattern. Here we're closing below, we have the punch formation, and then we're going to get out in the area of the equity of the Keltner band. But if I have a reason, I have the punch and I have money flow coming into the market, closing below the equity, the Keltner filter, tells me I will at some point get back to the upside of that. Usually, not always, but usually it's higher than where I went long. If you just look at the Keltner bands on anything, you're closing below, eventually you're going to get to a higher Keltner band. You're closing below eventually, in this case it takes quite a while, you will get to the high of the Keltner band. So you can't buy any of these. You need to make certain you're doing it when the market is set up. If you do that, you're going to have a pretty effective trading strategy.
Larry, are you modifying the Keltner channel on this one at all?
Yes, I am. I'll show you how you can do that as well. We'll do that next. There's Philip Morris with the Keltner band that we set up from using Intel. So you can vary these a little bit. The way we're going to do that is we're going to go to Format and Strategy. Here's a Keltner band with ADX. I definitely want ADX in there. And then I'm going to look at the length of the Keltner band. We can optimize that because all stocks have their own little pattern to them. That's the average true range of the Keltner band. I like that usually about just 1, so we're not going to get fancy with that. Yeah, okay, of course, I knew that. Thank you. Just set that at 1. ADX length is 8. Doesn't matter where that ADX is. We'll go from 35 to 65 by a factor of 5, and we're looking at various lengths of the Keltner band versus ADX settings. We want it to get above 35 or 40 or 50, and you're going to see something pretty remarkable. The higher that ADX is, the more accurate your trades are going to be. Look at that. With an ADX of 65, all of the trades were successful, but not very many of them. With ADX at 35 and a Keltner band at 20, you've got 75% winners on 32 trades. If we look at our setting of 40, ADX at 40, a Keltner band of 19, you've got a pretty nice profitable trading strategy. And if we look at that over here, we see that has been about the optimal way of trading whatever, Mark, what trade is this? What stock is this? Philip Morris, or Altria now. So you can adapt that a little bit. It's interesting, it's just went long a couple days ago, looking to get out as we approach the Keltner band now. And it went long. We closed below, so it goes long in the next opening. And it's holding in the trade. So the Keltner bands can be a really nice closing below, look for your buy signal, and then use the other side of that as your exit in the marketplace. Nice, simple trading strategy. Works the best on the Dow Jones Industrial Average stocks.